Welcome back to the Daily Stack. Today, it's August 26, 2025. This is not financial advice. If this show gave financial advice, the disclaimer would be longer than the bull market. Well, one whale yanked the floor, weekend liquidations nuked over $500 million, ETFs turned choppy, and Friday's PCA sits at the end of a hallway like a motion sensor. We'll map that range, pick the spots, and line up what matters next. Let's stack it.
Flipping all coins, yeah, I'm making that stretch. Cold wallet in the safe, I ain't taking no bets. Rug pulls in the night, gotta dodge those traps. Blockchain on my wrist, time coded his X. From the block to the chain, same.
Bitcoin coughed up the Jackson Hole gains after a single seller dumped roughly 24,000 Bitcoin into thin weekend liquidity. That hit the books, tripped stops, and erased the rally in minutes. By Monday, Bitcoin printed the $110,000 to $113,000 zone and kept sliding intraday as bids stayed passive. Ether did the opposite at first, ripped to a fresh new high around 4,950 and then retraced back to the mid-4,000s with the rest of the market. Coverage across major outlets ties the catalyst to the whale unload, plus follow-through liquidations. Those liquidations spiked into the flush. Estimates range from $550 million during the Sunday event to $800-900 million across the window as both sides got cleaned up. The point is not the exact number. The point is that leverage was way too high into the weekend, and the unwind reset positioning. Cleaner tape now, less froth. That's usually constructive if the spot demand returns. Context matters. Friday's dovish tinge from Powell lit a fast squeeze up, then a whale flipped it. Markets that rip on macro and reverse on micro are fragile. This weekend's macro local focal point is Friday's PCA inflation print. That is still the Fed's preferred gauge and sits on August 29th. Into that, the base case is whippy range behavior as dealers hedge and ETF flows drip daily. Key levels I'm watching. Bitcoin's recent top around 117,000 is the ceiling until proven otherwise, as the 108,000 to 111,000 area as a reflexive support band created by the flush. ETH's $4.9 to $5,000 spike is now the line in the sky, with $4,000 the balance region magnet. Those are the pragmatic waypoints, not prophecies. Now let's slide over into meme coin mayhem. Memes took the same elevator down as majors. Higher beta, sharper edges. If you live in that jungle, you know the rules. When Bitcoin wicks 5 to 6% in minutes, beta bleeds 2 to 3x that. Watch liquidity depth and slippage, not just percentage moves. Wojak on ETH and Landwolf on AVAX remain sentiment thermometers for retail rotation. My approach this week: treat every 10 to 15% intraday pop as a guilty until proven innocent, unless Bitcoin is reclaiming and holding above the mid-range. If Bitcoin can firm above 113,000 to 115,000 and Ethereum over 4,500, you can start grading momentum on 1 hour and 4 hour closes rather than knife catching. If Bitcoin revisits the low $110,000 or lower, expect second order meme bleed and hunt liquidity pockets, not round numbers. And in institutional and regulatory spotlight, flows first. U.S. spot Bitcoin ETFs have oscillated. After a strong summer, late week prints turned mixed to slightly negative into this move. Ethereum structures saw a quick flip to inflows around the all-time high push. Then the tape got messy with reversal. Why it matters. In post-halving, post-ETF regime, daily primary demand is a lever on direction. Soft flows into a macro print equals range. Strong net inflows can override weekend drama. Friday's PCE will be the read for two questions. Did disinflation continue? And did services stay sticky? A cooler core PCE helps risks broadly. A hot print likely pressures both equities and crypto into month end. This isn't because the number is magical. It's because options positioning and systematic flows react in a predictable way around it. Mark the time, Friday, August 29th. Narratives to track but not chase today. Rotation from Bitcoin to ETH. True for a moment when ETH tapped all-time high, then both fell. Rotation narratives are fragile and risk off. Correlation snaps back to 1. The one whale controls the market narrative, it's also fragile. A large clip can move price in thin liquidity, but the path after that depends on aggregate flows, not one wallet. The signal is the follow-through behavior in ETF and spot, not the villain of the week. Ethereum tagged an all-time high around 4.9K before retracing. If Ethereum can hold above the prior high base area around 4.4 to 4.5 thousand on daily closes, that's bullish structure. Lose the $4.3 thousand on volume, and you got an open, wider path to retest. Either outcome is tradable. Just know your invalidations. Dealer dynamics. After a weekend shock, gamma brands compress. Expect midweek pinning towards round numbers until new information, like flows or data. That expands the range. That is consistent with price behavior. We're already seeing stutters near around 111 to 113,000 on Bitcoin and the mid 4,000s on Ethereum as liquidity rebuilds. What's likely to happen for the rest of the week? The base case, range with volatility pockets, Bitcoin chops around 108,000 to 115,000. Ethereum between 4.3 and 4.6. ETF prints and funding dictate intraday direction. Each U.S. session open has headline risk bleed through from equities and late-day ETF flow headlines. And late-day ETF flow headlines can skew the New York close. Friday's PCA is the binary. A soft core PCE plus green ETF prints could reclaim the top range and refire the trend. A hot PCE with outflows likely forces a second leg down to run stops beneath the weekend low before buyers try again. Upside trigger map. Bitcoin reclaims and holds 115,000 on the 4-hour closes with rising spot volume and calm funding. That'll translate to a run towards 117,000 and prior highs. If Ethereum reclaims 4.6 thousand while Bitcoin is stable, that can lead to higher highs, but watch for correlation snapbacks. What I'd avoid: revenge trading between now and Friday's data. Let the market show its hand via flows. Trade the breaks, not the feelings. Investors, ignore the whale drama. Focus on supply absorption via ETFs, stable macro conditions, and network usage trends. If those three flash green together, pullbacks are gifts. If any two flash red, you will get better prices later. And that brings us to the tip of the day. Don't let the noise control your stack. Focus on position sizing, security of your assets, and your long-term thesis. The easiest way to get wrecked isn't one bad trade. It's overexposure with no plan. Community watch. Creators and traders are calling the whale the top. That is narrative theater. Tops form on distribution over time, not one wallet. If we print a lower high and roll into Friday outflows, they get their victory lap. If we reclaim and go, the weekend will be a funny paragraph in the bull market chapter. Either way, your job is to survive volatility and be present for the trend when it shows up again. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily, and I'll see you degens tomorrow.
The chain, same hustle, new game. Stacking Bitcoin, now my ledger got fame. Whales moving silent, but I'm watching the tide. Charts looking like a hood map where profits reside.